All right, ladies and gentlemen, welcome back to another episode of the Market MadHouse Show. My name is Cyprian Francis, and with me, the trading guru himself, Mike Patton, broadcasting live from Chicago. Good morning, Mike.
Good morning, Sip, and good morning, everyone.
Today is episode number 6, May 4th. May the 4th be with you, Mike. I've been seeing that
Yeah,
on social media all morning.
all day. Yeah,
Little Star Wars jab there.
yeah.
But it's a big day. It's the FOMC day, and a lot
Mm.
of people have been waiting for this afternoon to happen. And what are you seeing?
Yeah. All right. So this is a big one because we already had interest rates go up the last time. Now the markets are wondering, if the Fed's going to increase by 50 basis points. There's a strong hint that they will. And, Powell had made some comments about 3 weeks ago, and those really got people worried. That's where we saw the markets keep trailing over downwards after that. So that comes out at 2 o'clock Eastern. I last time Powell spoke, I mean, I was here. I said it in front of everybody here that I was expecting him to be softer, gentler, kinder, and he just came out like just dropped all the laundry on the floor. So now I don't know what to expect. I mean, I guess he can't do any worse as far as calming the markets than he already did. So um, I think the only way this turns out to be a good meeting is if he doesn't do anything more or than what the market has factored in. I mean, I don't see the possibility of them doing like a 75 basis point raise. I mean, that would be crazy. Um, 50 is I'm not sure they'll do 50. I think they're going to do a quarter, 25 basis points. So we'll see. But if they do 50, that's kind of a strong confirmation that they see some serious trouble to the economy with the inflation, which there is a serious problem. But if they act that quickly, knowing that that's going to sink the markets, knowing that's going to slow down commerce, make everything more expensive, if they're still willing to do that, then that means that yeah, it must be pretty bad.
Yeah, so we'll wait to hear what the announcement is, but
Yeah,
then we'll also keep an eye on some of the commentary and also any of the other tools that the Fed might be able to use when it comes to like QE and some of the
yeah,
balance sheet stuff, right? So we'll see what they have to say. We'll see what the market has to say, but that's kind of what everyone is waiting on.
yep,
Other than that, it seems to be a common trend from week to week, the same type news. COVID in China, the
right,
Ukrainian conflicts intensifying.
yep,
Anything new there that you think we should be concerned on that the
yep.
AI is bringing up for you?
Well, unfortunately, the AI can't give us any insights on these sort of things, politics, but and COVID. But I will say this: as far as just keeping track of the news, China, as I suspected, the virus is going to keep spreading around. Like China keeps trying this zero COVID strategy. They're trying to just lock it into a box somehow, but every time they try, doesn't work. And now, we went from Shanghai. Now we've got the virus in Beijing, and they're gradually tightening. Actually, not gradually. They're quickly tightening in Beijing. So now they're banning like you can't go to restaurants. Certain transit stations are shut down. So it's pretty much a guarantee that at some point Beijing is probably going to be in the same boat as Shanghai is, where they're just going to say, okay, we're shutting everything down. I don't know how else they could stop it. They're trying to test everybody, but I mean the policy of trying to test every single person. I mean, it's just like wow. I mean, even I know it's a communist country and they can do stuff like that, but at the same time, the logistics of that is crazy. Like, and you have to do it over and over again. So I mean, what if you tested a person, then he walked out, got infected by some other person who's just about to get tested? you know, I mean, and it's happening. So I don't know how they're going to stop this. At some point, I think they're just going to have to throw in the towel. But I really believe that this is a political statement for them that they need to prove to the world that we know how to handle things better than everybody else. It really feels to me that that's the only thing that's going on here, because otherwise it doesn't make a lot of sense. They're really hurting their own economy with this. I mean, obviously you need to take COVID seriously, but at the same time, you can't fight nature. So we'll see. And then for Ukraine, um, what's really big now is that aid package that Biden is pushing Congress for. And it's clear that they're going to. I don't. It didn't pass yet, as far as I know, but I'm pretty sure it will. They're basically debating, as they always do, about how they're going to package it. So instead of just saying, "Hey, we're going to send $33 billion in aid," they say, "Oh, by the way, we're going to add this into there that has nothing to do with Ukraine, that into there that has nothing to do with Ukraine," and that's what they're all bickering about. But on the same note, I think I saw a stat that I believe if we send $33 billion, I think that would put Ukraine as the fourth or fifth most money ever sent for this sort of aid by the United States to any other country. So this is big, and it just proves how big the this is intensifying. That we're sending vastly more funds and faster, by the way, than we usually do. Like usually these big numbers take years to, like Afghanistan or something. They take a long time to add up. We're just like, okay, next week, $33 billion, just like that. So it's clear that we're committed in this direction, and the European Union is doing the same thing. They're sending money as well. And also we're seeing like buildups and um, military exercises, troops being redeployed. I mean, it's pretty clear that this is lining up faster and faster to where it's inevitable that if we don't change directions at some point, we're going to have direct conflict between the EU slash, well, let's say NATO and NATO friendly countries versus Russia, which is not good. So hopefully, peaceful negotiations will, negotiations will continue and bring about a ceasefire, but we'll see.
Yeah, and I suppose that's one of those situations where overnight something could happen, something really bad could happen
Right.
because all these things are lining up, and the market will have to react to that, which can move things, especially when you're hitting certain levels and things like that. But in regards to all that spending or the proposal for the spending,
Mhm.
um, that didn't really have an effect on these recent trade deficit numbers, did they? Or does that even impact anything? Because I'm
No, it
looking at
won't.
that's
It
one of
doesn't
the
impact.
news. Yeah.
Yeah, it doesn't impact the trade deficit, but we did hit a record trade deficit this last report, which was this morning. 109, well, negative $109.8 billion. So, I mean, economically, I don't know. We don't seem to be gaining any ground on that particular front because every time, like you look every decade, and our trade deficit actually keeps consistently gets worse, and everyone kind of pushes it aside and says doesn't really matter. And I will partially agree that having a trade deficit by itself is not necessarily a problem, but it does typically lead to problems if it keeps getting worse and you're in a lot of debt and you are at war and you got supply chain issues and you got COVID going on. I mean, at some point, I think we need to kind of accept the fact that the economy is not indestructible, and the leaders that be need to take actions that will not make things worse for everybody. So with the inflation and all these things, yeah, with that deficit, that's a bad mark for the country. On top of a lot of other bad, economic data we've seen recently. So, and then of course the labor market is a problem too. I mean, we can't get enough people to work. I mean, it's just like I don't know, man. I have to admit I don't know where this is going, but it doesn't look good.
Yeah, and I feel like the everyday Joe, the public, they hear these numbers and it doesn't really impact them that much. But like,
Right.
this is a lot of money, right?
Right.
Both just for the spending, for the
Yeah.
deficits, right? And I'm pretty sure today's FOMC call, um,
Right.
there's going to be some more data thrown out there of things that are not doing so well. So I'm curious, and we'll go over this in a little bit. What the AI is going to be telling us in regards to some industries and some plays,
Sure.
because that's the power of Madison Trading House. So
Mm.
before we go into that, I do want to just throw a link out into the chat. So we're proudly brought to you today by Madison Trading House. It's an amazing analysis tool. I've been getting hands on with it, for about the past 2 months, and I'm loving all the features. And so, if anyone's interested in checking it out, I'm gonna go ahead and we're gonna dig into the screen here. But if anybody's interested in checking that out, the link is gonna be in the chat. And so, Mike, let's get into some of the news this week, or some symbols that we're
Yep.
seeing. And so, um, I think that the storyline is, COVID is dying down, at least in the U.S. People are starting to travel more, and
Right.
that's somewhat evident from the news, the earnings releases that came out this week for both Uber and Lyft. But they each kind of had different reactions to the news, in the
Right.
sense that, yeah, more people are using their service and stuff, but they're not necessarily making more money.
Right. That's precisely the way to describe it. So more drivers are coming back to Uber. So a lot of people, if you don't live in the city, you may not be aware of this. For people who don't, I mean, both of us live in a city, but a lot of people listening may not. And if you drive a car normally to get to work, or maybe you're working from home, you may not be aware that there was a huge deficit of drivers for Lyft and Uber for quite a while. I mean, when COVID hit, of course, the deficit was because no one was really traveling as much. So therefore, people just said, "Well, what's the point of me driving if I'm just going to sit in the car all day and I'm not getting any fares?" So people just quit. And then when things picked up again, you had this huge lag because a lot of people just chose not to go back. They just sat there and said, "Hey, I've got my unemployment thing going. I've got, I've got my stimulus checks going. I'll just wait it out." And it's kind of logical, because if you think about it, people work hard. You've been busting your hump all day for years, and then it's like you got this 2 month period where you really can just sit back and relax. I understand that. I mean, I understand why people just say, "You know what, I'll come back to it later," right? And as these programs kept extending, you still get your benefits, and then also you had like shortages all across the board. So hiring, everyone's like throwing everything at you. It's like, "Hey, come over here, come over there." So they got drivers to come back. So you have a lot more drivers now, and as a result, prices for Uber have kind of stabilized. They were pretty high for a while. They've kind of come down a bit, but they're not where they were before the pandemic. They're still way more expensive. Part of that due to inflation, of course, and also due to the fact that you have fewer drivers. So the Uber did increase their revenue. They made more revenue, that's for sure, as more people, as you said, were taking Ubers. But the problem is that revenue is not translating into bigger profits. In fact, the number is that Uber lost $3.03 a share in this last report. Just to put this in perspective, they were expecting 26 cents a share. So the earnings came out. Let me go to 1 month view of this. So the earnings came out. No, I think they came out. I have to look if they came out this morning or yesterday. But whatever the case may be, this is the earnings symbol there. And basically, the market was expecting 27 cents of a loss, and they lost $3.03. So that is a massive miss. I mean, that's orders of magnitude. Like you were completely off. And you have to keep in mind that, you're dealing with a company that's pretty large. So, it has a $59 billion market and plus market cap. So you're dealing with a pretty sizable company. So if you lose $3 a share with a company with a lot of outstanding shares like that, yeah, that's going to hurt. And the stock basically is down sharply today. Not so bad. It's actually only down about 7.47% at the moment, but it did go lower for a while. But Uber looks like it's going to generally survive, because if I look at the AI here, let's jump over to this view. Technically, it's bad because the stock's down, but that's logical because, hey, they're not making as much money as they were before. On the insider view, what is interesting is that we are seeing some pretty big buying. The chief executive here, I can't Dara, I can't pronounce the last name, but it looks like they bought $8.98 million worth of shares. We do see institutional ownership is up 2.53%. We got 109 buyers, more than we had before, 19 more sellers. It's in 17 top 10 lists, more than it was before. So these aren't bad numbers. So Uber probably is going to be okay. I think that they missed on earnings for sure, and that's not a good sign management wise. It kind of shows that they're not spending their money well. So that's why their fundamentals are yellow. They're mediocres, not too good, not too bad. But I think that if you compare them to Lyft, now Lyft has the same look on the fundamentals and the valuation as Uber, but when we look at it in more detail, we can see that Lyft is actually doing poorly. You have institutional ownership declining. You do have 19 more people who bought, or institutions, as I say, excuse me, that bought it, but we have 16 more that sold it. So if you look at that, these numbers are about the same, and it's dropped out of top 10 list. Six fewer companies investment firms have it in their top 10. So this is not looking so good for Lyft, and Lyft is down 31%. They also had a miss on earnings, but what's hurting them is their forward guidance. When we looked at the news on this, you can read it here in the news feed. But basically, what they were saying is that for Lyft, their forward guidance is not good. Uber looks okay, but Lyft looks like they're basically telling everybody, yeah, we're not going to make as much money. We're going to be losing some money. So in the wars between these two companies, Uber is the clear winner. Lyft is less diversified too. I mean, Uber's got Uber Eats and all this other stuff, whereas Lyft is basically just Lyft. You know, so Uber's winning the technology war, in my opinion. So if we're looking at something in this space to buy, the software is dead right. Uber is your better pick. I didn't even look at the fundamentals here. Uber also showing consistent improvement. You can see like these are the earnings, and you can see they're not when they're down. That means that the earnings expectations were negative. But as you can see, they're actually getting better over time. Uber has it's not really a profitable company, just to put that out there. Uber is getting close to profitability. If you look here on the net income graph, it's starting to get to the point where it's almost about to go positive. And this kind of looks like almost exactly the way Tesla used to look, where you had the same curve, and then eventually Tesla went positive, and then that's where the price shot up. So Uber looks like it's on the way. Lyft is farther behind. You can see it here that it's not really improving quite as quickly. So they're quite a ways behind. Both of them are improving, but the problem is the pace. So it's not that the AI is not telling us that these stocks are going to disappear. They're not, and the market doesn't think so either. But it's basically picking the winner, and clearly it's Uber. So Uber's got average estimate has Uber worth double what it is now, sometime in the near future. Maybe the next 12 months. For Lyft, currently right now, market's estimating about the same. But I think after this report, these numbers are going to change. So once the analysts issue their new projections, which will happen today and tomorrow mostly, then we're going to see how these numbers change. And that's actually one of the nice features of the software. It automatically keeps track of all that stuff. So I don't have to search around every newsletter, newspaper, and say, hey, what are the analysts saying? It's already there. We're just waiting for them to update their expectations, and then bam, it's going to go into there, and we're good to go.
Yeah. And I feel like that's a really good way to compare and contrast two similar companies in a similar industry. If you're
Right.
looking to take a position, this is a real good way to do that analysis. And from my notes and from some of the reading that I did this morning, I think the majority of that Uber loss was based on investments. And
Yes, it
I
was.
believe Uber is much more involved in investing in buying up all these tech companies, which
Right.
does help them innovate and diversify their business. I mean,
Right.
I'm pretty comfortable logging into the app and just flipping from ride to food to ride to, like, it's pretty good UI there, and
Right.
so
Right.
love the comparison. Another wonderful feature of the Madison Trading House software are the scanners, right? And
Yep.
so we're going to dig into a little bit more on the scanners. But before we do that, you've been running these scans for quite some time, and you've got a nice winner, a nice opportunity that came up that
Yep.
we want to showcase as a good example of the power of these scanners. And I believe The ticker is what do we got here?
VTNR. That's the one.
VTNR.
Yep. So VTNR, Vertex Energy. So with the situation that we have globally in the oil markets, where there's a lot of upward pressure, some parts of it due to the conflict, oil embargoes, supply disruptions, things like that, but also due to growth, economic growth in the world. Oil prices have been under pressure to go up. So I've been looking for any companies in the oil space that look like they're in a good position to rally. And this is one of the ones we found. So I'll go over in a second how I found it. But this is Vertex Energy. Now, for our members, those who subscribe to our service, I give them a way to access information that I curate myself and our team curates, where we share opportunities that we locate, like this one. So I let everyone know about this stock roughly when it was at about $9 and I think 20 cents was the price. Let me see. Yeah, about yeah, okay, yeah, it's about 920, 930, something like that. I put out the alert a few days ago. I wasn't expecting it to move this quickly, by the way, but it did. So the reasons I was interested is when you look at this overall, it has some good metrics. So first, it's in the oil, and they're a company that refines. So they refine for regular fuels and alternative fuels. They also recycle motor oil, things like that. They're located in Alabama, I think. Their plants in Alabama. Their company's based in Houston, as it says up here. But that's what they do. And as far as it goes, this is not a stock that you likely would have heard anything about. It's not like a big name company, but it does trade a significant amount of volume. It is a lower price stock, so that makes it very attractive to a lot of people because you can get in at a price that's very easy to afford, but it also has a lot of upside potential. If you look here on the fundamental side, these are the projections. So analysts have the mid-level projection for this stock is at $19.50, right? So we're currently trading roughly half that price. And when we got in, we were literally trading at half that price, a little bit less than half. So when I mentioned this to the room, I said, look, the minimum target that's been set for this stock, the absolute minimum out there was 14. It is currently $14. Now, analysts, of course, they're not guaranteed to be right, but when you have a lot of eyes looking at the markets, generally speaking, the consensus view is roughly going to be correct. It's very rare in my experience that if analysts set a target upwards for a stock like this one under the same circumstances as this one, usually they reach that target. Now, whether or not they stay there after that is another matter, but they usually get there. So when I was looking at the numbers here, I mean, they look good. Sales, I mean, the sales growth is a little bit down, but the expectation is that that's going to boost as they're able to continue to expand their business. Net income is down, but they're turning to the point where they're becoming profitable. So this is not a company right now that's blazing a trail of huge profits. They're not, but they're the type of company that you like to look at. They're kind of newer. They're in a space that can be very profitable in the current environment, and I think oil price is going to stay up, so therefore it looked good. So on the metrics, technically it looked good. It was on a good trend. As far as insiders are concerned, institutional ownership of this stock is up 10.47%. That's a large increase. That's a very large increase. So that means institutions are definitely buying this stock. You have 13 more institutional buyers. You have two fewer institutional sellers. It's only in one top 10, but that's fine because it's like I said, it's a smaller stock, so you're not going to have as many people looking at it. But on the valuation, it actually looks solid too. So the forward PE is expected to be positive. So that's that line over here. The current PE ratio is negative because the company's not making money. But forward, they're projecting that this company is going to make some serious earnings. So that's the reason why it gets the higher score. The software knows to look at both the current PE ratio and the forward PE ratio. In other words, what the company is basically saying about itself, like where they see themselves being down the road. It also has a good score up here. So beta means I don't usually talk about beta that much, but beta basically means that the stock is measuring how much the stock moves in volatility percentage compared to the rest of the market. So a beta of 1.6 basically means this stock moves about 1.6 times more volatility than the overall market. So it's a mover, which is what you want if you're looking for a stock to make you a quick return. It also has a positive alpha. Alpha means like how much better the return of the stock is versus the overall market. So if it has positive alpha and and it's a strong beta, that's actually a very good sign. That's a stock that looks like it's going places, and the numbers match up too. Fundamentally, right now, it's mixed because it's not hot or cold, simply because a lot of this is future projections, and the software is able to know what people are expecting. So if you look here, I've set the earnings to yearly, so this is really clear. They had a profitable year in 14. They lost money in 15, 16, 17, 18, 19. But if you notice, there's an increasing or decreasing loss, right? So when growth companies come up, if you look at Amazon or Tesla in the past, they were losing money too. But gradually, you would see these numbers get better. And then in 2020, because oil prices collapsed and everything like that, they had a really bad year. 2021 actually came out. They had no earnings. They were at zero, but that's not a loss, right? So now, when we look at the projection for this year, it's actually solidly positive. Right now, the average estimate is that they're going to make 75 cents a share, which would be their first profitable year since 2014. It would be a bigger, by far, profit, about three times what they made in 2014. And 2023 is expected that they're going to hit somewhere around $3.46. So the analysts are looking at all this stuff. All the software is doing is keeping track of what their estimates are, so we know that the stock is improving as far as its analyst ratings. And for that, in that note, let me show you how you can find that. So if we go here to the screener, okay, I'm not going to go to the scans this time. I'm going to go to the screener, and let's just make a new screen. Okay. Now I'm going to look for stocks that are energy stocks for now. All right. So I'm going to look in that industry. So firstly, I have to choose what I want to look at. So the first step is to choose the criteria that I want. So let's just say I want, well, let's just say first I'll start with industry group, right? So that's just going to tell me, it tells me here like um, a closely correlated group of stocks that are related in an area of market such as software, hardware, etc. So I'm just going to select that. I'll also select actually, let me just go sector. That'll be a little easier. I'll just go sector just to make this easier. I'm going to look for a particular price range. I'm just checking off the boxes of what I want to look at later. And then I'll select what I'm going to look at after that. Let's say I want something that's optionable. I'm going to look at the score. Let's see. I'm also going to look at, let's see, valuation. Well, I'll leave that to the score for now. And then fundamentals. Let's see here. Let's look at. Let's see. Hmm. Well, I'll leave this part for now. Let's just go with what we just did so far, just to show how you can find something. All right. So I'm going to say apply criteria. All right. So it's showing me the criteria I asked for. So I have sector all, but I don't want all. So I'm going to choose a sector. So I want energy. So there it is. I selected energy. All right, so that's my sector, 341 stocks. The price range, let's just say we don't want anything under $5 and we don't want anything over $30. Okay, got that. And then over here, optionable is a yes. I only want stocks that have options, usually they're more liquid. And then finally, we're going to look for any energy stocks that have, let's say, a positive on the chart, positive on the institutional activity. We want positive on the valuation. And for this one, we just don't want it to be bad. So let's just go with this, okay? Just as an example. I hit run search, and it's showing me my results, and there is VTNR. Now, basically, all I was trying to do is look at companies that have certain patterns, like oil prices are going up. So I was looking to find any stock that's in the sector that's kind of going up. So that's where we get the technical part. The next thing I was looking at is the insider activity and the institutional activity. I want stocks that are being purchased by institutional trading. Then I looked at the valuation. I don't want the valuation to be bad. I want it to be something that's in a good bargain price or a good price range. And then lastly, I was flexible on the last part. I didn't have to have a fantastic fundamental picture. Just want to see something that wasn't bad looking. And these are the three stocks. So VTNR is one, but we also have these two others: Delec, U.S. Holdings, and Solaris Oil Field Infrastructure Class. So I don't know anything about these other two companies, but just like that, I found them. So let's take a look. So if I click on this company, okay, this one actually trades some good volume, right? So it trades about 1.32 million shares today out of 1.2 million on average. Obviously good on all the numbers. Let's look at the fundamentals. Doesn't look so great in my opinion on this side. Analysts are actually projecting this to slow down, and it kind of looks like they're right about that. Some of these metrics seem to be slumping a bit. At the very minimum, it looks like the future expectations for earnings are not, yeah, they're not looking so solid. This is a fairly mixed bag. So the analysts are projecting that this is going to be a profitable company over the next 2 years, but you can see it's flat. It's not showing any growth. As a general rule, if a company's not showing growth on their earnings, usually the stock price will flatten out. So when stocks keep going up, that usually means that the market's expecting that they're going to become more and more profitable. So we looked at that one, and then we can
Well,
look at soy.
Mike, one thing real quick is
Yeah.
that had four of the greens like marked
Yes.
off. So like
Yep.
in theory, you can't get any more greener. Like you're like that wave may have already passed in a sense.
That's true. So the thing that you want to keep in mind with all green is that this is the way I usually explain it, and you're kind of on the right track there. When something's all green, that means it's happening now, right? So it's already in motion. These are usually the stocks that you get the quick run up, right? So I looked for stocks that go green. That's why I like scanning for that just became all green today, because that basically means that the technicals could not have been green. It couldn't have been on an uptrend until today. And that's, of course, in the scanner. That's a default scan that we have. So when you find things that just get on that list, then there's a good chance they may go up. So I can actually combine that scan with the screener. I can literally say, show me anything that shows up in this scan, and then screen it out to only show me, let's say, energy stocks if I want to. Usually that list not is not going to be that long anyway, so you don't have to do that much work. But so the company looks good. It's not that it's a bad company, but I think what the analysts are basically seeing, and this is one of the reasons why this view is so great, I can actually see that people are forecasting a reduction in profitability, or at least no growth, is what they're saying. So basically, the market sees the stock as basically being worth what it is now. Whereas that other one, Solaris Oil Field, that does show some expected growth, and that's why you're seeing that over here. So right now, it looks like it's trading, as far as the market's concerned, at fair value, but some project up to $16. So when we're looking through these stocks, we're just looking for the ones that show the best profile. And in my opinion, which is why we got into it, this one did, because when you look at those projections into the future, when you look at it on a yearly basis, these are huge. That's like a huge increase. So this one's like green all across the board. So it's not green up here, but it's basically everyone's expecting the stock to gain in value for the fundamental reasons. So for that reason, there we have that one, just like that.
Yeah, and that's one of the amazing features of the software is the screeners and the scanners. And
Hmm.
we literally just watched you narrow your list from like I think 500 down to like 116, down to maybe 20, down to 3 opportunities. And so you're
Right,
really doing an amazing job of filtering for only the things that you want to see, and
right,
I'm assuming you can do this across the board for financials, for bank,
yep,
like you can really niche down.
right,
And so it's an amazing analysis tool for anyone who is doing a lot of this and analytical work for, in order to take positions.
right.
I think at some point we're going to have to dig into the options part because
We
we
will.
haven't really even touched on that yet. And I
Yeah,
would love to see the way that Madison simplifies that, because I know options can be very overwhelming for people.
Yep.
But that's one of the amazing tools. And so once again, if anyone's interested in checking the software out for yourself, the link is in the chat. Go ahead and hit that button. Sign up for the 7-day free 7-day trial. And if you're enjoying the content, you have some questions, you have a specific stock or position that you want Mike to look at, feel free to drop it into the chat or leave a question. Otherwise, I feel like, everyone's waiting for this big FOMC meeting, Mike, and,
Yep.
we'll see how the market plays out through the end of the week. But it should have a big effect on what's going to happen the rest of the week, early next week, before, we go live again.
Yep, absolutely. And we'll definitely look at the options functionality next time, to show some of the ways that you can use it to find great options opportunities as well.
Awesome. So with that, we're going to go ahead and close the show out. Appreciate everybody tuning in. Once again, if you have any questions, just respond on any of the socials that we are streaming on, and we'll get back to you as soon as you can, or as soon as we can. And with that, Mike, happy FOMC,
Yeah,
day.
yeah, absolutely. All right. You have a good one, Sip, and everyone take care.
We'll catch you later.
All right.